India's largest airline, IndiGo, has just placed the largest ever aircraft order in aviation history. It is buying 500 passenger jets from European plane maker Airbus. The deal was struck on June 19th at the Paris Air Show. The order is for narrow-body aircraft such as A320neo, A321neo and A321XLR, and the deliveries will take place from 2030 to 2035. The IndiGo deal overshadows another historic large-scale order placed by another Indian airline run by conglomerate Tata Group. In February this year, Air India had ordered 470 planes. Of these, 250 are to come from Airbus and 220 from Boeing. While the IndiGo deal is estimated to be worth about $50 billion going by the most recent Airbus list prices, the actual cost will be significantly lower thanks to substantial discounts. So, what is the rationale behind the size and timing of IndiGo's deal? On the sidelines of the Paris Air Show, IndiGo CEO Pieter Elbers said that the airline would double in size by 2030, indicating that it would have a fleet of about 625 by then. According to Elbers, the latest order will provide IndiGo a planning horizon of over 10 years with regards to the flight network and fleet composition, while also securing the supply pipeline for the next 10 years amid supply chain challenges and delays. Meanwhile, IndiGo will receive deliveries of 480 aircraft till 2030 from its previous orders with Airbus. So, IndiGo's historic aircraft deal clearly suggests that the airline is looking at expansion. IndiGo has tripled its fleet from 100 in 2016 to over 300 at present, with the 2019 closure of Jet Airways helping on the growth front. IndiGo also seems to be enjoying a similar advantage from the grounding of another airline, Go First. It registered its highest ever domestic market share of 61.4% in May. The IndiGo deal also comes after the February order by Air India, which had last year revealed a 5-year transformation plan to triple its domestic market share to 30% by investing in new aircraft. Later in 2022, the Tata Group announced the merger of Vistara with Air India, with the deal expected to be completed by March 2024. This might have also been on the back of IndiGo's mind as it went ahead with the Airbus deal. Against this backdrop, what does the latest deal reveal about IndiGo's domestic strategy and the direction of the larger Indian civil aviation market?
An order like this, of course, means that the airline is going to expand, and the expansion will of course be from tier 1 large cities to tier 2 and tier 3 cities, but also a lot of these smaller cities which aren't small. If you look at it from a global perspective, they are going to build themselves into larger sort of cities with greater connectivity. So yes, of course, they'll continue to expand domestically and also internationally.
Indian aviation has, for the first time, a long-term growth strategy, a very confident capacity, and the right balance sheets to support this capacity and future long-term growth. So IndiGo, we see that this order is for both new inductions as well as replacements. So IndiGo will continue its growth strategy. There are currently a lot of airports in India which are underserved. So IndiGo will again try to utilize those spaces as well as expand into international routes.
Coming to the international front, the February Air India order included a mix of narrow-body and wide-body aircraft. Air India is also looking at growing its international routes significantly. Meanwhile, IndiGo's latest order did not include wide-body aircraft. However, IndiGo is reportedly exploring a separate purchase of such planes, with both Airbus and Boeing competing. So, what are the implications of the latest deal for IndiGo's international market strategy?
They have a significant number of Airbus 321 XLR aircraft on order. Now, the XLR is yet to get certification, but there are these test birds flying around. So you see, irrespective if they get the wide-body aircraft or not, that's a different story, and we'll have to wait to see how this pans out. With the XLR, at least they'd be able to connect most of Europe. They might not be able to go to London per se without payload restrictions, in my opinion, but the vast majority of Europe can be connected with the A321 XLR. So IndiGo is going to expand further internationally, not just into Europe, but also other parts of the world. They'll go east. They'll also expand in Southeast Asia, and the XLR is going to be the aircraft of choice.
Based on the orders that they placed, we know that they are targeting international expansion. IndiGo currently, if you look at the split, is about 23% international, 77% domestic. in the next 8 to 10 years with this deal, their goal is to have in the next 8 to 10 years about 30% international split. And beyond that, they want to make it about 40-50%. So that's the immediate goal.
On a sobering note, persistent engine issues have reportedly brought down Go First. Multiple IndiGo aircraft have also been grounded due to issues allegedly related to Pratt & Whitney engines. While IndiGo has opted for CFM engines instead in previous orders, the engine selection for the latest one will be done in due course. So, could the engine issue rear its head again in the future?
Well, you see, there's just no way, in my opinion, to mitigate risks, from new technology. All these new engines that are available in the market, which are of course more fuel efficient, and they save you tons of money. This is new technology. And yes, there have been issues with Pratt and Whitney engines. And then there is supply chain issues which have aggravated those issues further. I mean, it all completely depends on how these supply chain issues are addressed over the next couple of years.
Ultimately, what challenges will IndiGo face in realizing its ambitions through the latest deal?
The thing with aviation is you can place all these orders, but the fact of the matter is no aircraft are being delivered on time. All deliveries are delayed due to supply chain issues. Airlines don't have seats that can go into their brand new aircraft. So ordering aircraft is one thing. Getting them delivered on time is a complete different ballgame. And it is widely sort of expected that these supply chain issues aren't going anywhere for the foreseeable future.
Air India on June 20th sealed the $70 billion February deal with formal purchase agreements. There's clear bullishness surrounding the world's third largest aviation market, which could see the number of domestic passengers more than doubling to 350 million by 2030, from 144 million in 2019. However, experts warn that recent airline failures show that the sector remains volatile, making engine and supply chain troubles all the more challenging.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.